Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
Will credit unions lose their federal tax exemption? Will NCUA be shuffled into a couple desks in the basement of the Treasury Department? Issues of monumental importance to the credit union movement are actively under discussion in Washington, D.C. today. And longtime credit union lobbyist John McKechnie is on the show today to report on the latest mumblings on Capitol Hill. The big takeaway from this show, these issues very much are on the table in Washington, D.C. It's reality, they're being discussed. On the date of this recording, February 18th, McKechnie expressed optimism about credit unions retaining their tax exemption. But he also stressed that what will be needed to win this fight is a concerted action by many credit union people to get the message across that for them to keep doing the valuable work that credit unions do, they need to keep that tax-free status. That means put on your shoes and get busy walking the hill and be ready to walk it not just during GAC, but in the weeks and months afterwards, because, stresses McKechnie, relationships with members and staffers on the Hill are triggered via repeat contacts. Repeat contacts is not one and done. Listen up. So, how many years have you been involved in government affairs, aka lobbying for credit unions?
Well, I joined CUNA appropriately enough on April Fool's Day of 1987. I had been on Capitol Hill for 3 years. Like I said, I worked on the Hill for 3 years. I worked at CUNA for 18 and a half. And after that, I was an NCUA. I was an appointee at NCUA, worked for 3 chairmen. And then I hung my shingle out in March of 2013. March 2011, rather. March 2011.
So the 3 chairmen were from the different sides of the aisle?
Yeah, they were. It was Joanne Johnson, followed by Mike Frizzell, followed by Debbie Matz. And I'm kind of proud of the fact that, I was a presidential appointee. I was what they call a Schedule C, which meant you were appointed in a political role. You weren't a civil servant, and you served at the pleasure of the president. But I was very pleased and grateful that Chairman Matz, even though she was a Democrat and I'm a Republican, she chose to keep me, and I was happy to do that. We were still, we're still winding down the corporate / mortgage market issue that was such a crisis, from 2008, 2009, 2010. So when she came on board, she certainly could have replaced me, but I was glad she didn't, because we still have some work to do. That was a great time. I actually learned a lot when I was an NCUA staffer.
No, I know enough about state capitals in Washington, D.C. to know that a guy in that kind of position who works for both a Republican and a Democrat must have some talents.
Well, I appreciate you saying that. I think it had something to do with the fact that I was fortunate to get to know Debbie Matz when she was on her prior stint on the board, and I was at CUNA. And again, we were sort of in the middle of a tail end crisis. It
could have wiped out credit unions. Actually, it was awful.
It was the most intense and frankly exhilarating thing I've ever been involved in, and that includes the famous HR 1151 battle in the late 90s, which was tremendously important too. But the threat of failure that you just alluded to was really something.
Are we in that same situation now?
Well, there are a couple reasons to say yes. Clearly I think the tax reform bill that seems to be percolating on the Hill, and I was actually on the Hill most of the morning meeting with some staff. I have a little bit of fresh news on that. But the tax reform issue certainly carries a big threat. I think even more so now than I've seen in almost 40 years of being involved in credit unions. And the reason is I think the banks have gotten some traction on certain issues, combined with the fact that Congress is in the mood to put the entire tax code on the table. We've been hearing since last fall, even last summer, a lot of members of Congress said we're going to take a 360-degree review of the tax code. And a lot of our friends specifically said, you credit union guys need to be on your toes because we're going to take a look at everything. I hear from a lot of different people on the Hill of varying stripes. Some of them like credit unions a lot. Some of them don't like credit unions. But when I start hearing that kind of talk from people who do like us a lot, saying, be careful, be worried, be ready. I paid close attention to that. In the fall, I remember talking to a Democrat and a Republican on the Ways and Means Committee in back-to-back meetings. And they both used exactly the same terminology. They said credit unions could be under the microscope in 2025. And it turns out they were right. Neither of them said they wanted to see us taxed, but both of them said we are going to be looked at. So I found that to be interesting.
Let's say the tax exemption thing gets wiped out. How much money would this put in the coffers of the federal government?
Well, supposedly, I mean, I've seen estimates 2, 3, 4, even 4 billion.
The number I heard from DCUC is 3 billion.
Yeah,
which is pocket change in Washington D.C. This is lunch money, man.
It is, so. But I'm very quick to point out that there are about 100 groups out there or more that can say the same thing. Everybody says, well, it's a drop in the bucket. It's not worth it. The thing is, though, if you keep putting drops in a bucket, eventually it fills up.
And Everett Dirksen had a line you might remember, something like $1 million here, $1 million there. It adds up.
Yeah, and that was back in the days when $1 million was.
Oh, that's back when. Yeah, that was the equivalent of $1 billion today.
Yeah, you're right. But so I would caution everybody against saying that because we're a small amount, that means we're insignificant, which means that we're not worth going after. I think that if Congress takes a macro look at things, they're going to see a lot of different exemptions that they want to do something about. I think the policy arguments in favor of credit unions retaining our tax exemption are very strong. Don't get me wrong. I don't think we're going to lose this fight. I think we've got a great economic, very pro-consumer argument. But I do think we have to bring our A game. I think I've been saying for a long time to any credit union audience that will listen to me that we really need to sharpen our pencils and come up with the best financial arguments we can, and to justify the fact that we deserve this tax exemption. I'll also be a little bit crass here, and this is something that I've used a lot with Republicans. I've reminded people that if they do something to our tax exemption, there's an average of about 220, 230,000 credit union members in every congressional district in the United States. And, if you do away with the credit union tax exemption, that's tantamount to raising taxes on 220,000 of your constituents, Congressman. And, people send Republicans to Congress typically to cut people's taxes, not to raise them. So keep that in mind. I think making that mathematical, talking to about 220,000 constituents, that tends to register with a lot of members of Congress. I've never seen someone dismiss that. I've never seen somebody say that's not important, because it is.
Does the credit union industry still have its old friends in Congress, or have they retired? Are they out of the business of politics?
I think
there were people on both sides of the aisle, Republican and Democrats, who are hardcore believers in the credit union movement message.
We've cultivated them still. I think that as some old friends go away, new friends come on the scene. I feel good about that aspect of it. I remember I happened to be working on Capitol Hill back in 1986, the last time that there was a really, really comprehensive tax reform bill passed. That was the famous Reagan, Dan Rostenkowski tax bill, where somebody wrote a great book about it, which I recommend, called Showdown at Gucci Gulch. And it was written from the standpoint of a reporter who noticed that every morning outside the Ways and Means Committee, you had all these very well-heeled lobbyists lining the halls, waiting to get in and do their jobs. And like I said, it's called Showdown at Gucci Gulch. Very good chronicle of what happened back then, where different dueling tax interests fought it out. Had a daily duel, if you will. I'm not trying to pretend like I had an exaggerated role. I was a junior staffer in the minority back then, so it's not like I was sitting in the rooms with Dan Rostenkowski cutting deals. But I remember pretty clearly the credit union industry trying to weigh in and successfully weighing in against being put in the tax bill. And for a while back in 1986, some people in your audience may remember this, for a few weeks, credit union language was in the tax bill. And it was put in there by a Democratic chairman with the consent and agreement of a Republican president. And it took some doing to get us out. But I will remind you that we had a couple of very well-placed friends on the Ways and Means Committee who went to bat for credit unions. I don't know if we're going to get to that point this time. I hope we don't. But the friends you were just alluding to, the people, do we really have any true believers? I think we're going to find out, but I sense we do.
Now, do the big banks, the money center banks, have any interest at all in this? I don't honestly have a sense that Chase gives a hoot one way or the other.
I think it's a great question, and I think the answer that I can see is no. I honestly think that the bigger banks, the money center guys, really don't care. I mean, they'll pay lip service if asked. Would you like to see credit union taxed? Sure, but nobody in that echelon really invests much energy into it. The ones that really, really, really don't like us are the smaller banks.
No, there's two. I used to say there were two trade associations, one that on the credit union side, and then independent bankers, both of whom yelled about credit union tax status. One talked about credit unions losing the tax exemption. The other ones wanted credit unions to lose the tax exemption. And for 20 years, I said, this dog don't hunt. It ain't going nowhere.
Yeah.
And now I wake up and it's the dog's hunting. It's a vicious dog.
It's a vicious dog. It wants to bite. The Independent Bankers Association, as you note, was very, very vocal about it. They've always been, but they haven't really been able to get traction on much until fairly recently. And I think that one issue that even our friends on the Hill tell me has opened the door a crack is the issue of credit unions purchasing banks.
But that's a handful of instances.
It's
and as I always say, no credit union comes up, puts a gun to the head of the bank sells because the credit union offered the best price. Period.
Yeah, don't confuse me with the facts, though. It's you're right. It's an insignificant number. It shouldn't be an issue. It should actually be something that credit unions should be given credit for, because when they do purchase a bank or bank assets, they generally continue to maintain service to a community that had been served by a bank, and we do a better job of it. The consumers in that area get a better deal from the credit union, and like you said, nobody's forcing the banks to sell, but for a number of reasons, I think that has rubbed some people on the Hill the wrong way. And I'm not just saying some people. I think some people who are genuinely friendly to us look at it with a little bit of a kind of a quizzical, why exactly is this? In other words, it seems to fall outside what people perceive credit unions should be doing.
Well, there are, and I'm sure some of these people. There's some big old credit union lovable dinosaurs from years past who also hate this acquisition of banks by credit unions. Yeah, it's like dancing with the Antichrist.
Well, you make a good analogy there. I just wonder if, we could talk the whys for a whole.
Oh, I'm all for the bank acquisition.
I am too.
I view it as it occurs so infrequently. It's hardly worth discussing. Although Lord knows, American banker treats this as though there's been a tectonic shift.
It's disingenuous on their part, and like you said a few minutes ago, the banks are willing and active in and enthusiastic participants in this. I'm simply trying to tell the audience that it has gotten some negative attention on Capitol Hill, and even among friends or general people who are generally either very supportive or somewhat supportive are raising questions about it. Is it going to be the end of us? No. Is it going to be something that defeats the credit union tax exemption in this next bill? No. I wanted, by the way, to mention that I do hear people on the Hill talking about the bank trade associations trying to shop a plan where they try to have a threshold, a cutoff, if you will. Any credit union above a certain size gets taxed. Credit unions under a certain size don't get taxed. That hasn't been put on paper yet, but I've begun to hear more rumblings about.
Well, that's kind of like CFPB.
A little bit, yeah.
There's a handful of credit unions, I forget the number, 20 or so,
yeah,
that were regulated by CFPB, and the others weren't. And there was also conspiring in boardrooms. If you were a $9 billion credit union, how the hell do we not go over that threshold?
Sure.
It's which is kind of silly thinking, I believe, but that I know it's true. It was happening, but that's the problem here. And I hear this from people who are very pro credit unions. If you take away the tax exemption, some of those biggest credit unions are going to initiate a discussion of demutualization, i.e., they're not going to be credit unions.
Right.
And USAA once had been a mutual society, not a credit union, but it was a mutual. And it went out of the mutual business. It demutualized. If you're Navy Federal and you lose your tax exemption, I think it would be derelict not to sit there on the board level and investigate demutualizing. I'm not saying therefore they should do it, but I think that would be incumbent upon them to hold that discussion.
Completely agree. And I think credit unions are wise in that they are looking at the total picture, and they're trying to figure out what options would exist if something adverse happens on the tax exemption. I also don't hear from any credit union people who really think we're going to lose it. I think they're appropriately concerned and they're appropriately on alert, but I think that we should feel that we still have a great policy argument to make. But you're right. If something does happen with the exemption, credit unions are going to maybe look at changing structure, and they're also going to make legitimate demands for more powers and authorities.
Well, there has to be some kind of quid pro quo.
I'm not negotiating though, and I think you probably aren't suggesting that either.
No,
we're going to win the tax fight.
You're an optimistic guy.
If you're around me during this football or baseball seasons, I'm not generally. But in this case, I think that again, I feel good about our arguments. I feel good about our political activities. I'm encouraged by the fact that credit unions have really woken up to this possibility in the last few months. I know last summer into the fall, I would hear from some credit union advocates who said, it's not going to be an issue. Don't worry about it. We've got too many friends. Don't worry. It's just talk. Well, no. When you're a lobbyist, you have to be. It's like being a parent. You just worry about everything all the time.
Now, I assume GAC this year, I know every year they walk the Hill, but I assume they're going to be stampeding on the Hill this year.
Well, I'm fortunate to represent a handful of credit union trade associations, state trade associations, and also a few individual credit unions. And everybody seems to be pretty motivated about coming to Washington and hitting Capitol Hill. I'll add on to that advocacy in government affairs is not simply an episode where you just do it once a year, you check the box, you go home. I think it's got to be an ongoing process and an ongoing commitment, and it's an ongoing process. So for credit union people, we can't just assume that coming to Washington once and talking to your congressman for half an hour and then going away, that's not going to get it done. We got to make sure we stay engaged. I've always said to credit unions that the best time to lobby is when you don't need anything. And in this particular instance, we do need something. We need protection on the tax exemption. But you've got to continue to maintain a constant relationship with your lawmakers at all levels.
Well, yeah, years ago, I worked in a Washington, D.C. trade association. I was not a lobbyist, but it was a big lobbying organization. And the lobbyists spent a lot of time cultivating relationships.
Mhm.
It wasn't just, oh, you have to vote this way on this bill.
Right.
No, they were there every day, meeting with members, but also with key staff people. Probably talking much more with staff people than members, but
Yeah.
and
Yeah.
they were just trying to make sure the conversation was there to be had when they wanted to have the conversation.
And you have to build up a rapport and a trust and some kind of a relationship. I remember in the early days of the famous HR 1151 battle we talked about. This was probably 1996 after the bad court decision came down. And I remember hearing a story about a group of credit unions who went in to see a very, very senior Democrat on the House Financial Services Committee and asked this guy for help on the field of membership issue. And, he was, according to the people who were there, he was non-committal, but his staff person called me after the fact. And he knew, I knew this guy pretty well, but according to him, the congressman was met by a group of credit union people, none of whom he'd ever seen before. And, I was frustrated to hear that because, that's a good case in point as to why you had to cultivate that kind of relationship prior to needing to ask for something big like help. I think we've done a good job of making sure that doesn't happen again. But I never forgot that. And I used it as an example of why credit union people need to get to know their lawmakers before, you need to know the number of the fire department before the house catches fire.
And it helps if you're friends with the fire chief.
Yeah, it does. It does. Now, you were asking about the earlier about the threats to credit unions. The other threat that I will mention, it has not taken as much oxygen up as the tax issue, but in the last couple of weeks, there's been an increasing buzz in DC about possible consolidation of regulators.
I actually hear a lot of credit union people talking about the end of NCUA, or NCUA becomes a desk in the Treasury Department, or maybe two desks. And I don't know if this is just nightmares they're having or if this is a serious discussion.
I don't know either yet. It was since the November election, there's been some buzz. It broke into the open last week. There's a Wall Street Journal article that specifically talked about merging two bank regulators, the FDIC and the OCC, and maybe folding them into a part of the Treasury Department. And that was the first major media coverage of it. But candidly, I've heard since the election, a lot of the policy people, especially in the Senate Banking Committee world, have talked about restructuring and merging some of the regulators. And I will tell you, unfortunately, that after the Wall Street Journal article appeared, they said, well, that article wasn't quite accurate because it talked about the bank regulators. But I was told directly by somebody sitting a foot from me that if such a consolidation occurs, it's not going to leave credit unions alone. In other words, we may be too small to put in a Wall Street Journal article, but we're going to be, I think, according to people who are writing the potential plan, we may be part of the entities that are swept together. If they consolidate deposit insurers, I can guarantee you that there are going to be a lot of people looking at the National Credit Union Share Insurance Fund, and that's a concern. Like you said, the scenario of being in a desk in the basement of a windowless office, no doubt, in the Treasury, that's going to have a really adverse effect on our industry.
In what respect?
If we are in a bank-dominated regulatory environment, I think the people who write the policies and the rules are going to look at everything through the prism of a bank, and they're not going to understand or be interested in the unique cooperative nature of credit unions. We have a separate regulator for a good reason. That is, we are different, distinctive entities. If you put us into a bank environment, we're going to be put into a bank matrix, and we're going to end up being regulated by banks and like banks.
Yeah, that makes sense to me.
I don't like the sound of it, though.
No, I'm not saying I'm a fan of it, but I
no,
can see how it would
guess.
be, oh, geez, the person who's running that agency that person would be a banker.
Yeah.
And wouldn't really know about credit unions. And
No.
it's sort of like this kumbaya culty thing.
Well, and I think it really
All you got to
bothers me.
do is bring DCUC and Navy Federal down there, and it's not kumbaya. It's
It would really bother me a lot, and I know that the regulatory supervisory side would be a nightmare for credit unions, but it really would be unfair if our share insurance fund just would get swallowed up by the FDIC fund, which is a premium based fund. We have, of course, a 1% deposit based fund. Just that alone, and the way it would be financially disadvantageous to credit unions. That's just something we have to really guard against and fight. So this all may be, under discussion at a time when we're having a potential tax fight. These are interesting times, as they say.
well, clearly the current administration wants to shrink government. Musk is running around with an axe swinging it, sort of. Well, if you just happen to be in the path of the axe, you're toast. And could NCUA be hit with one of those axe swings? You betcha. There's no reason to think it's immune. So
Yeah. I remember when I was at NCUA maybe 15 years ago, there was an attempt during the famous Dodd-Frank Act. They got former Fed Chairman Paul Volcker to come out and unveil an idea about consolidating regulators. It didn't get into the final product, and it didn't get to be part of Dodd-Frank, but this is not the notion that we can have a unified regulatory structure is not that new. It's always around. This time it seems to be getting a little bit more tangible.
now, why is it, or perhaps I'm just blind? Why is it I'm not seeing too many credit unions being very vocal about these issues, NCUA and the tax exemption? We both know one association that's extremely vocal, DCUC. I'm not seeing a lot of other entities jumping up and down.
Well, I think I maybe slightly disagree in the sense that I believe that a lot of credit unions are getting ready to get very engaged on the tax issue, although nothing's on paper on the tax issue yet. Just like on the consolidation issue, there's no bill to aim at. But I think credit unions seem to be making quiet preparations to get very engaged on this. To my point earlier, I'm optimistic about how well we're going to do once we have something to work on. If we talk in a month, there may be a different landscape. It looks like both the House and the Senate are getting ready to begin drafting parts of this famous reconciliation we've all heard about.
Isn't that the most worrisome thing?
Yeah.
That you could put in like 100 words into a reconciliation bill that's 13,000 pages, and those 100 words wipe out the credit union tax exemption.
Our job is to make sure that A, that doesn't happen, or B, if it happens in the drafting process, that we do something to make sure that they know that to do this would be very radioactive. It would be a third rail politically, and it wouldn't be worth putting it in there. To my earlier point, there are a lot of groups that are going to make that case. I happen to think, though, that as large, credit unions have a very sympathetic profile on Capitol Hill. We're very pro-consumer. I'm not sure the current number, but it's got to be over 130 million Americans who are members of credit unions. That's a pretty big constituency to want to rile up. If you're a member of Congress, you don't want to do that.
This is true. No, you go back, you have to remind the Congress people that almost all of those members are voters.
Yeah, that's right.
And many of them probably actually do vote.
We're going to make sure that that case is made. So in addition to being politically dangerous for Congress to do this, it also makes no policy sense because credit unions do exactly what Congress has always wanted them to do, which is serve the consumer marketplace and serve it well.
And also, at least vis-a-vis the big banks, the Chase, most credit unions serve a membership that Chase doesn't want as customers. Chase will not say that, but they absolutely don't want them, and they make that as clear as possible. We're going to charge you $12 a month for your checking account where you have a $12 balance.
That's an excellent point. That's a very good point. I think credit unions, sometimes we haven't done a good enough job of simply saying the truth, which is we do a better job than the banks.
do a better job for many people. Banks do a better job for a certain echelon of people than most credit unions do. But as I say, Chase, unless you have $2,000 or something in a checking account, you pay $12 a month for the privilege of having a checking account. That's $144 a year. That's it adds up.
Real money, yeah. Well, if a member of Congress is watching the podcast, I'd simply say, don't forget, credit unions are a creation of Congress. They do what you guys want us to do, and if credit unions didn't exist, you'd have to find some reason to reinvent this, because we do such a valuable thing for the marketplace. And I think we help keep the banks honest.
Well, what do you think about the argument of, if you're anti-credit union, that means that in effect what you're doing is stimulating the growth of predatory lenders?
Well, I think if you hear a lot of credit union people say that if you do something to restrict or eliminate what credit unions do in the marketplace, then you're absolutely right. That's great news for the predatory part of the lending market. Who wants to do that? Would a congressman want to do that? I hope not.
I think very few congressmen would want to run on a platform of, I want more pawn shops, I want more title loan companies.
Yes.
That would be a pretty toxic platform to run.
I think sometimes being a lobbyist or an advocate for government affairs is just a matter of reminding people as much about whatever, maybe this is a moment where credit unions need to remind our elected officials why we're so important. And there's nobody better to do that, by the way, than the credit union people themselves. We can have as many DC-based advocates running around Capitol Hill, and we have a purpose, but candidly, the best advocates we have for credit unions are credit union people.
Hey, I remember the first time I went to a GIC, I was talking to a board member of a small New Hampshire credit union, and she said, well, she was going to go out and walk the Hill because of credit union taxation issue. This was many years ago. And, I said, your credit union wouldn't pay a dime in tax. I'm not even sure you make money. It's, and she said, well, it's a bigger issue than that. It's, and she went out and she walked the Hill. She was happy to do that. And that's the power of credit unions. It's not just a Jim Blaine going and knocking on doors of congressmen in North Carolina.
It's been explained to me by many credit union people over the years that to lose the tax exemption would be something that would really change the cooperative, not-for-profit structure. We'd have to have a different motivation under a tax environment.
A now retired CEO of a very big credit union said the entire business model would have to be changed.
It would change, yeah.
And he didn't know where he would wind up, but he didn't think it would be good for anybody.
No, and you'd have to ask a member of Congress, what exactly? I mean, who are you trying to benefit here? Are you really seriously trying to say that the smaller end of the banking industry needs help when they're still making tons of money? Just to placate that part of the banking world, I think it would be a bad reason to do something to our tax exemption.
Well, to me, the worrisome thing, and Lord knows you have a much better finger on this pulse. I mean, I don't have any finger on this pulse. But when you are in the business of giving tax cuts to certain parts of the population, it is incumbent upon you to be in the business of raising taxes on other parts of the population. And this government wants to cut taxes. Yeah, that means they also have to raise taxes. I mean, it's a paradox.
Well, just this morning I was on Capitol Hill and I heard somebody on the Republican side of the Ways and Means Committee say, the credit union exemption is not at the very top of our list. They're actually looking at maybe some colleges and universities that have engaged in what a lot of the Hill Republicans think are improper political activities recently. So those are sort of at the top of the list, if you will, but the same staffer said we're looking at the total package, though. They're going to put the tax code on the table, they're going to look at it. That's one of the reasons I'm asking for vigilance.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey again. That's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.